It's that bad. It's not a typo. This will be a short video today, but I do want to look at a couple of things. Disheartening stock market. I've been warning about this for some time. The setup for this has been taking place over time. But remember, when we first started seeing the rumblings of, hey, Congress has sort of agreed, everyone's agreed, even Pelosi agreed, they shouldn't be able to trade stocks. We haven't seen the legislation come through on that, but we knew that was the beginning and the end. Remember when the Federal Reserve got caught trading stock? Well, not the Federal Reserve, but members of the Federal Reserve got caught trading stocks and using inside information and all this stuff. Really bad. Not illegal, but unethical. Not illegal, but not really okay either. And that was sort of the beginning of the end. I think that was when the realization that there are people who work in government who are taking advantage of the free market based on their inside information they obtain from working for the government started to unravel. That was right then. That was when I called, like, hey, this is probably the top, because these people are going to start getting out. Now, we've only had one congressional filing in the first quarter of a member of Congress family spouse shorting stocks. And I think this quarter we're in right now, we're going to see a bunch of filings showing that that is in fact the case, that there will probably be more people who are either at least selling stocks, if not going on the other end of it and shorting stocks, buying puts, etc. Why is this all happening? The stock market has been overvalued for quite some time, but we have a couple key things going on here, and I won't get too much into the details of it, but bottom line is Amazon had a miss. There's a slowdown in a couple places. Apple kind of a miss as far as just expectations. GDP was negative this week. That doesn't breed an air of success, or at least a stamp of approval on the valuations these stocks are getting. And if we look here, let's see if I can make this a little bit bigger. Okay, Dow Jones today down 939. That is huge. I am, full disclosure, short the NASDAQ. I am out of my oil trade. I'm giga long Bitcoin, and I am getting big time long Facebook. And that's it, besides other non-related holdings in stocks. So down 939. Here's something. Look at the pre-market. Oh, what? The pre-market, which is just futures activity. Now, this is to be taken lightly, but that also looking very, very ugly. I think the stock market crash is now finally upon us. We can say, like, hey, this is how many weeks in a row? How much are we off of the highs? It's getting there. We're not to 20% yet, but we're getting there quick. And I think we'll be there in the relatively near future, which is going to signal essentially a bear market for stocks. So the big question is, does this affect real estate in any way? Will this cause other things to happen in financial markets? Like, will the stock market going down cause people to lose their jobs, and then therefore cause, what's the trickle down? And my prediction has been for some time that any type of scattering from one investment vehicle, let's call stocks a single investment vehicle, would be going somewhere else. Real estate could be it. Rates have gone up a lot there. One of my theses was, when the stock market crashes, watch out for Bitcoin. We're not going to talk too much about mortgages today, but we are going to look at a couple of mortgage charts. And Bitcoin holding on here to this support. This red line support is the current medium-term trend, which is higher. We're on the very lower edge of this band, which has only been touched a couple of times. We're kind of been hanging out here for a minute. A lot of people believe there's some pent-up stuff here that's going to explode higher. I don't know if that's true. A little bit longer-term downtrend that we have is signaled by the blue here. And you can kind of see that, all right, we're in the down. So there's open range here in this space. So I'm not saying that I think that's going to happen, but it's still in play. That possibility is still in play. So we will see. But here's the correlating aspects of this to real estate. The most important is mortgage rates, especially with mortgage rates being up so much right now and having been up so much all year long. We'll get into specifics on this in just a second. We were talking about how this could be rounding up, And maybe when I saw the stock market was down this morning, I was like, oh, perfect for mortgage bonds, because typically when stocks get hit, bonds get lit. No, I just made that up.
All we want to do is pump you up.
Funny guy here. Oh, I know. But not happening. Down 50 bips. How could it be? How could that be? How could we be down 50 in this situation? It's probably the worst case scenario. If I go back to different, stock market crashes that I've witnessed with my own two eyes, we're talking about Y2K was a little bitty. 9/11 was a pretty big one. 2008, the Great Recession, was a pretty big one. I really was only tracking mortgage bonds back in 2008. And back then, this is the kind of thing that we saw. It was like just full-scale sell-off of everything. Everything's selling. Everything's down. And so these typical sort of correlations between assets aren't there. Now, we've noticed this a few times in recent history, and that's a little bit unsettling, because we would like to think that if the stock market goes down, that we would get a pump, at least a little pump in bonds, or maybe just have it hold, but not really happening. That said, this isn't a terrible candle. It doesn't have, we got a little tail on the bottom. We got a little tail on the top. A little meat in the middle. It's not terrible. It could be worse. For sure it could be worse. We're still holding the range. The overall range here is being held. So it's not awful, but we'd like to see a pump here, at least a little bit, and we're not getting one. So stock's down this much, and bonds not reacting well. What does that do to stuff? How does that affect jobs? How does that affect people's ability to pay for stuff? Well, if you're in my position, you've seen a lot of people coming through the turnstiles to buy houses. They're using TSPs. They're using retirement funds. They're using investment accounts. When those things are up, when you have a green number next to your investment account showing how much you're up, it's easier for you to make sense out of taking that money out. Taking the money out of there. Hey, I made 13 grand. I made 130 grand, whatever. I made this money here. Now I'm going to go and take it and put it there. When you're down, it's harder to do that. I don't want to sell while I'm down. I don't want to take that loss. So that's one effect. It could be pretty minimal, but more important than anything, and this might be the real reason for me making this video, is the sentiment, okay? The sentiment of what's happening in the marketplace. When you look and you see red across the board, rates continuing to go up, the sentiment can get a little sour. Inventory is going up a little. We're going to look at inventory in just a second too. Here's the new number that came out yesterday. Last week, average mortgage rate was 5.11%. And then this week, which is through last week, 5.10. How could that be? Derek, I thought you said rates have been going up. They have been. This is what's so great about this statistic right here is it takes everything into account. Every different type of loan, whether people are paying points or not. Something that's been happening lately is a lot of people are asking about points. A lot of people want to buy their rate down. They want to buy their rate down so that they can get a rate that they feel okay about. And I've had a lot of people particularly looking to buy a rate down into the high fours. And so what you saw here is you're just seeing more people doing that. That's my guess as to the reason why we got a drop, because rates definitely haven't dropped week over week. They're sideways. We can say, hey, they're pretty sideways, relatively similar. But I think that's just people buying points. When we look at inventory, I always use the same parameters. You know how I like to look at data. I don't want to give myself any false feelings about it. So I try to look at the same thing. I have moved the price point up to $800K. Detached house, 3-bed, 2-bath. That's it. Those are the only requirements. I'm not putting any of Temecula in this search range here. This is just going up to Bonsall and Fallbrook. And you can kind of see how many houses there are. 333 is the number that's coming up here, and that's the most I've seen in some time. It's not a ton at all. Not a ton at all. 3 million plus people in this space to have 333 homes. It's not a ton, but it is up. It is up a little bit. So nothing alarming going on here in the real estate space. I think we've seen some things, maybe tilt a little bit more towards the buyer recently. I will tell you there aren't as many hot homes on here as we've had in the past. There could be less eyeballs out there looking online as well. But at the end of the day, a little more inventory, a little more level playing field. Hey, that's good. That's good for if you work with buyers anyway, which is what I do. You can zoom in. Whoa, hello. Didn't mean to do that. You can zoom in on these areas, just on Redfin here. Kind of get a little bit better idea of how many of these homes are hot and what price points they're at. What do they look like? And if you look at this stuff on a regular basis, you just kind of get a feel for, okay, how many dots are there on the screen? How many hot little orange rectangles am I seeing out there? And maybe this is a little bit more inventory and a little bit less hot homes, but it's a good thing. That is a good thing. The fact that rates are somewhat in a stable position. This is just facts, okay? So you know what my opinion is. Facts are those little things that we're seeing happen in the real estate market. They're good things for buyers. We need to level that out a little bit. The fact that mortgage bonds staying in this range right here, consolidating sideways, also a good thing. Would have liked to see a little bit of a green candle today, but that's all right. However, stocks, remember what I said, the most vulnerable asset of them all? I know I've been saying this for so long, it may just feel like I'm beating a dead horse, but most vulnerable has definitely been these pieces of paper, by far. And I think the bloodbath is now upon us. And is it too late to sell? Is it, I don't know. I mean, you got to talk to your financial advisor. I don't know what your situation is, how much money you got, what you're trying to do, how long you want to hold it, all that stuff. There's so many things you got to factor in, but I'm just saying prepare for it. A lot of long-term investors, I tell them, hey, stock market's going to crash. They're like, all right, I'm just going to keep buying every week just like I always do. Cool. Follow your plan. Don't let me change your plan. You follow your plan. But if I'm right, I want you to be prepared. Be prepared for what could happen here, what we could see. Could the Dow be down 2,000, 2,500, 3,000 in a day? Something like that could happen. Okay, that's possible. So prepare your heart for that. If that happens, what are you going to do? Certainly you're not going to sell if that happens, right? Right?
Check, please.
Don't do it. Don't sell at the bottom. Whatever you do, just bite down on something and pull the trigger. Add to it. This is what they've been setting up for quite some time. I've been warning people of this. It's going to get worse. But stocks could have an effect, mostly through sentiment, mostly because of sentiment. The sentiment and the ultimate feel that people have. When people feel like they're rich, they're more apt to spend money. When people feel like they're losing money in the market, they will be less apt to want to spend money. So it is more of a sentiment correlation than it is going to be a direct correlation of stocks hurting real estate or whatever it may be. So let's keep that in mind, guys. Heading into the weekend, just know that real estate still looks good, still looks strong. Rates hanging in, holding on. 5.11 to 5.1 week over week. There's a little bit of stability there. A little bit of stability there in rates. I'm not calling a bottom in bonds yet. I'm not calling that, but we have to just understand that it's possible that the bottom could be in. It is. That is possible. I don't know what news is coming that's inflationary that isn't known at this time. That's what it would take to push this stuff lower, I think. And it could be out there. It probably is out there, but it might not be. So let's keep all those things in mind here as we sort of move forward. Also, if you have, someone who, a client, let's say, that's ghosting you or something like that, after the stock market bleeds out a little bit more, just know that could be part of the reason why. So, be sensitive to that, understand that. Some people feel more confident and have more ambition when they feel like they're winning than when they feel like they're losing. So if they feel like they're losing, they'll be less apt to take a chance, take a risk, or make a commitment. That's just basic sales psychology. So just kind of understand that that is what will be the new thing to combat, not as much of, well, did real estate become a bad investment? No, you still get all the things you did when you buy real estate in the previous millennium. You still get all the same benefits. Actually, you get more now. Tax deductions. They didn't have taxes back then. Abolish the IRS, hashtag, whatever. Okay, that's it for me. Guys, have a great weekend. I'll see you all soon. I'll be here if you need me. Have a good one.